you don't know how we roll at 361, if people step up and say, I'll do that, we tend to say, yes, sure. So Adam said, I'll organize a LATAM panel. So that's what you've done. Before you introduce them, do you want me to play this video, or do you want to introduce first? All right, maybe if you're one of the panelists, come on up and I'll play this video in the meantime. Doesn't really get... John Price, couldn't be here first.
Hello, everyone. I'd like to start off by thanking my good friend Adam Blanco and the champion of this event, Mark Saynor of 361, for providing me with the opportunity to talk about 5 growth trends in Latin America. My name is John Price, and I'm the Managing Director of America's Market Intelligence. We're a group of consultants spread across Latin American and Caribbean markets that help our clients navigate both opportunity and risk in the region with bespoke research and advisory services. We operate in a dozen different industries, but always with a geographic focus on LAC markets. The first opportunity that I wish to highlight is demographics. For the last 2 decades, unbeknownst to most, Latin America has been the fastest aging region in the world, thanks to a plummeting fertility rate that dropped from 5 children to less than 2 per woman in only 35 years. By comparison, it took Europe and the US closer to 60 to 65 years to make such a transition. With fewer children to feed and clothe, families have more disposable income for things like travel, private education, consumer electronics, and cars, all of which have exploded over the last 15 years. Looking forward, over the next decade, Latin America's population over the age of 50 will grow by 45 million consumers, while the population under 30 will shrink by almost 20 million people. Elementary schools will soon be closed or turned into old age homes. Demand for health services, money management services, travel services will all grow and change. The second growth area is digital commerce. By that I mean both the e-commerce distribution of physical goods as well as the online purchase of services. E-commerce growth skyrocketed during the pandemic, but has since matured to a more reasonable 12% per year growth. COVID obliged a still cash-dependent Latin America to buy online in order to survive in some of the strictest lockdowns in the world. When 60 million Latin Americans tried e-commerce for the first time during COVID, they found it reliable and time-efficient and never went back to brick and mortar for some of their purchases. Disruptive new apps are also very well received in Latin America because they replace some very inefficient, overpriced, and poorly serviced segments like taxis, hotels, catering, television and cable, and education, to name a few. E-commerce still has growth legs in Latin America because of the small traditional retail footprint and heavy traffic that obliges consumers to go online in search of niche items they cannot find in their own town or city. Latin American e-commerce penetration will eclipse that of the US in the next 2 to 3 years. Meanwhile, disruptive digital commerce apps still have plenty of inefficient sectors to upend in Latin America. Just ask companies like Uber, Airbnb, and Coursera, for whom Latin America is one of their biggest growth stories. The third big.
So, John, I love you, but it's easy to give a hook to somebody who's not here. We have a 6-person panel. We can't do 6 minutes of a video. Sorry. But why don't you introduce your panel and kick it off?
Thank you, Mark. Thank you very much for this opportunity to moderate the panel and put the LATAM panel together. Quick plug on John Price. He was instrumental in helping me get this panel put together. So, no, we're not putting him back on. So, John set the stage for LATAM. What are the emerging opportunities? What are the trends there? Now, Latin America right now is becoming a geopolitical and geoeconomic focal point globally with the US, Russia, and China. While Russia's been asleep, China and Russia have been in Latin America for the past 2 decades. With John's background, on the emerging trends in Latin America. We're going to move on to Professor Eduardo Gamata at FIU, the Green School of International Public Affairs. Thank you. um, Dr. Gamata has advised on Latin American presidential campaigns, and he has Marco Rubio actually taught at FIU. I don't know if he's still teaching there, probably not. He's got a promotion. So, Eduardo, maybe you could tell us a little bit about, and we've got a full panel here and not a whole lot of time, so we'll have a breakout afterwards. So the panelists will introduce each other, but we'll start with Eduardo to set the stage in terms of policy.
Well, as a Latin Americanist, this weekend was very intense, and most of you, of course, are probably, those of you who have any business in Colombia, probably are still reeling from the aftermath of last night. But I think taking off from Colombia, you sort of see the setting of what is likely to occur over the next 4 years. First and foremost, one of the things that we have been accustomed to saying over the last few years is that Latin America was completely unimportant to the United States from a strategic point of view, and that we only worried about Latin America when it came to things like drugs and immigration, right? Yet the reality is, and perhaps most of you heard Donald Trump say last week that Latin America really is not important to the United States, that the U.S. that Latin America sees the United States as being important, but we don't see Latin America as being important. But the intensity with which the situation has evolved over the last week and a half now, really 1 week, particularly with Mexico and particularly now with Colombia, tells me that Latin America may in fact be much more important than what even Donald Trump said last week. And I want to point out 3 areas. One is the significance of commerce and trade, particularly with Mexico. Mexico, that free trade agreement, the USMCA, is likely the most important free trade agreement in the world today. And as somebody was mentioning before, the United States has about $150 billion deficit in trade with Mexico, which of course the US wants to shut down. But more than that, right, is the fact that breaking the USMCA, it'll be renegotiated in 2 years, is going to be a very difficult challenge, not just for Mexico, but for the United States. I don't think the US is going to take over Canada either, like somebody else said, but Canada can also not afford to break the USMCA. So in terms of trade, right, the significance of what's happened over the last few years is the plethora of free trade agreements that the US signed with many countries in Latin America. The USMCA was, of course, the FTA first, the most important. But free trade agreements with Chile, with Peru, with Colombia are extraordinarily important as well. In this sense, probably more important to Colombia than to the United States. But just consider the impact of what would have happened if the sanctions that Trump was trying to impose on Colombia last night would have gone through, right? We wouldn't have had flowers for Valentine's Day. Coffee would have shot up, right? I mean, the impact would have been felt here, and it would have been felt in a rather dramatic fashion. The same thing I would say is overall, right? The Latin American area, and in fact, as John was kind of heading in that direction, is critically important still to the United States and will become so much more important, and perhaps not because of trade, but because of the relationship that security has to trade and to the demographics that John was talking about. Okay, so in that sense, I mean, I can talk about it a little bit more, but it seems to me that last night the focus on sanctions is important, but we've sort of neglected to really think about the full implication that this will have on our long-term strategic vision, not only of Latin America, but the geostrategy, global geostrategy. Thank you.
Thank you, Eduardo. And we'll get into that more when we go into the breakouts. Seed to plant in everybody's head here, given what happened with Colombia, can you imagine how Trump's going to deal with Venezuela? Venezuela's got that's the second largest group of illegal immigrants in the United States. What leverage does Trump have over Venezuela? Not a whole lot. And we'll get into that in the breakout. Next, Axel Christensen from BlackRock, Chief Strategy Officer for LATAM and Iberia. Question I wanted to ask you, Iberia? I haven't heard that in a long time. So, Axel, please talk about quickly about the institutional, from the institutional banking perspective, and many of the family offices that you work with Latin America.
Sure. Thank you, Adam, and thank you for the opportunity to share with you some thoughts about Latin America. I definitely, we had this question, what keeps us up at night, right, to prepare for the panel. And, honestly, it was very fortunate to have the NFL championships, because that kind of provided a little bit of leisure against the worries of the Colombia situation. But actually, more than the trade situation, I lose a lot of sleep in terms of what's going on in terms of growth. Growth is a very big concern. Probably the most relevant, sentence I might say today is probably the most effective policy that the U.S. might have if they still continue to have immigration, legal immigration in mind as a problem to solve, is to work for Latin America to grow back again. Have people stay in their countries because they can find good jobs, they can have a good life. And it's not just the economic growth, it's also security. Security probably in Latin America and security around drug trafficking, organized crime is probably the biggest concern, because people in Latin America are able to put up with dire economic conditions. I think Mano pointing out that companies are very resilient. I heard a lot of friends here in the U.S. looking for Brazilian CFOs that were able to understand how to manage a corporation when inflation is high. Yes, you guys do. But definitely, when your family is not secure, you think about moving to somewhere else. So BlackRock has been a very significant investor in the region, as well as receiving a lot of investments from the region. We are perhaps the largest, if not the second, institutional owner of Latin American companies. I don't know, perhaps of Vale, but no.
All.
Yes.
All companies. You own all companies.
Yes. So we have a pretty good sense of what's going on in the region. There's definitely a lot of value. I would probably dispute what Mauna said in terms of, bringing fresh fruit to U.S. supermarkets is a very high value added type of service. It's not trivial to bring to ship cherries to China during their New Year's holiday. So there's a lot of perhaps not high tech, but definitely high value added industries in the region, and probably the biggest risk of that continuing to happen is the irrelevance that Latin America might have from an economic and markets perspective. A lot of the markets have been shrinking because of bad political decisions. And actually, the two largest companies, market cap wise in Latin America, or two of them at least, happen to be companies that directly listed in the U.S. One is an e-commerce company called Mercado Libre. It's the largest retailer in the region. It didn't exist 25 years ago. It was created by several graduates from Stanford University. And the other one is Nubank, a neobank that comes out of Brazil and is slightly larger than Itaú, that has been around for several decades. So definitely there's a lot of talent. There's a lot of opportunities as investors that we see develop in the region. Our question is, should we be buying them in the region, or are they going to go to list themselves on the NASDAQ or in New York? So, and from, being an asset manager that kind of connects Latin American investors, such as family offices, to the rest of the world, we're seeing a lot of interest to diversify, even in places that had a very strong home bias, like Chile. After the social rights of 2019, they switched and increased a substantial amount of their wealth into international diversification. The big challenge for that is the tax changes that are going in the region. Countries are spending a lot and building up a lot of debt, and they want these families' wealth, and they want to tax them. And so their taxes is a very important issue in terms of how Latin Americans are thinking about their investments.
Thank
So
you.
that's about
Axel.
it, Adam. We're
Very good.
back to you.
You right on time. Thank you. You mentioned New Bank, which is a very good segue into Mexico, which Artur is working with in Mexico. Plata Card, I don't know if anyone's familiar with that. It is basically a replica of Tinkoff Bank. A lot of the learnings have been transferred into Mexico, and they've launched quite an interesting digital bank. Artur, maybe you want to. He's not with Plata Bank, by the way.
No.
He-
I'm working in one of fintechs, Monitech Services, startup company in Mexico City. Actually, I spent all my life in fintech, banking, financial services, and now I believe that Mexico is one of the best markets to invest, to grow. And I tell you why. First, it is 126 million population in Mexico. If you think that additional 38 are living here in US and they have chance to visit their home country soon, so the growth potential is very high. 2017, only 35% out of them had access to the banking services. 35% 2017. Last year already 49, and it is huge potential for growth. So no access to normal banking system. Number of banks is ridiculously low. And from on our side, we see that digital penetration is very high, 80% smartphone penetration, very supportive regulation for last 7 years. So if you see the largest unicorns in Mexico, 7 of them are fintech, Story, Credit Solutions, Clara, Bitso, Clip, Confio, Nubank, and of course, Plata Card. This is the first bank who received a banking license for last couple of years. Nobody could get it. So I believe that this market will continue the growth. It did grow 24% last year, and it is expected that it will continue to grow 20%. So, and I think it's a great opportunity, and I will be happy to talk about that later on the panel.
Thank you, Artur. Actually, taking a page from Mark Sanner, one of the questions when we go into the breakout would be, whose cheese are they taking for these new banks? Okay. Next, also going into on the ground actual work in LATAM. I'll move this on to Paul Swigert, who does a lot of work in Colombia and actually brings us coffee. So maybe you could go ahead, Paul. Thank you.
Thank you, Adam. Yes, I work at Extelis Partners, which if this was 3 years ago, would have described as an investment bank, but today I'd say we're more of a merchant bank. We basically use our own capital to structure and invest in opportunities. Sorry, don't do these events very often.
See if it's working.
No, yeah. There it is, yeah.
Now it's on?
Try it
Okay.
now.
Is that better?
Oh, yeah.
Yeah, I can
Yeah.
actually hear myself. Okay. So yes, we are investors in Colombia, and it was a wild weekend. Yeah, so I am the founder of a group called Extelis Partners. These days I would call us a small merchant bank, just in the sense that we have a fair amount of our own capital. And these days, rather than structuring deals generally for a fee, we structure deals, invest our own capital, and then if it works at a later stage, we'll bring in co-investors. But the initial risk, we're very comfortable and happy to take ourselves. So background was always emerging markets, mainly Eastern Europe, which is why I know Adam and a number of others here. But these days is generally focused on Latin America. So we do have large investments in Colombia. We started with fertilizers. We extended that to coffee. Soon we'll be in palm oil as well. But by DNA, what we like to do is just to solve problems where we see financial bottlenecks, when we see inefficiencies, we sit down and we try to figure out, how to solve for those. It just happens that these days when we solve for them, we put our own money to work to do it. So what interested us in Colombia, we went there first as part of a supply chain fintech and got to know the agricultural sector. And we saw that there's a real absence of financing that matches the harvest, from the moment you're making the application of fertilizer through to the actual harvest. And that there's a very inefficient factoring business that's sprung up around it. And yes, they've digitized that business like Chile, and that's fantastic. But we made an investment in a fertilizer distribution business on the ground, and I can tell you that it doesn't work. All we had to do was watch it for 3 months, right? So what we did is we decided that's an opportunity. So we extend credit all the way through to harvest, like they do in other sectors in other countries. And we take the offtake of coffee principally today, so that it's better for the farmers, removes a big inefficiency, allows them basically to buy more fertilizer from us, so they get a better productivity and yield. And then we get a more guaranteed supply of the offtake, which is one of the biggest problems they have. So we're about to do the same in palm oil. So that's one area that we're invested in. We're in Guyana as well on strategic minerals side. We're in Argentina in oil and gas. We have fintechs in Argentina, Mexico, and Colombia, including being an early investor in Plata, which thank you, Adam, for mentioning that. He didn't know, by the way, that we have an investment there. So we've seen a lot of different things. But look, in general, I'm not a politician, thankfully never will be. I'll leave that to people who are smarter than me. We just go in and try to find, real businesses and try to understand whether we can have an impact on those businesses, find good local partners, and try not to be betting on the politics. It seems now that investments we made over the last few years, due to changes in geopolitics, that may be actually more favorable for us, tweet storms this weekend notwithstanding. And so that's a good thing. Like in Argentina, we were already in Argentina before Milei came to power, but him coming to power obviously is a good thing, but that's not the reason we're there, And so I'm very hopeful actually for Latin America. I'm very hopeful for the change in geopolitics. And while I may not necessarily agree sometimes with how the messaging is done, I think that the intent to focus on it more and have more of a strategic discussion is a good thing, not a bad thing. And we welcome that.
Thank you, Paul. We had a preparation Zoom call before this, and one of the topics that came up, which I thought was very interesting, was the legal environment, the rule of law in the countries in which they operate. And with that in mind, I'll move it on to Carol. The choice of Argentina was actually, part of that was driven by rule of law.
That's true. Yep.
So, Carol, thank you very much. Greenberg Trog hosting us and allowing us to have this panel. Go ahead.
Thank you and welcome. Happy to host everyone and hope we're treating you well. Can you hear me?
Yes.
Okay. Get off. There. Fantastic. All right. So welcome. My name is Carol Barnhart. I'm the co-chair of the corporate practice here, and I have spent my entire legal career doing M&A cross-border. Most of the time in the past has been a lot in Europe, but lately, and I would say over the last 10 years, has been primarily focused in Latin America. We have offices in Mexico and Brazil, so we do get a lot of, there's a lot of various business, fintech being a huge one in both markets, energy, telecom. But fintech really, in both in Mexico and Brazil, has boomed over the past couple of years. I think it's led by fiscal policy, tax changes in Brazil. But it's Latin America, and yes, people tend to forget about Latin America, but it is about an $80 billion M&A market. Maybe not as big deals all the time as in the United States, but there are plenty of smaller, mid-sized market deals that are very prevalent and very interesting, because often includes the cross between US, Europe, and Latin America. Many times you have private equity, you have family offices, and in the shift, which we were talking earlier with Adam, is the shift has been a lot of private equity and a lot of family offices in Latin America have decided to actually invest in some of the countries, depending on currency and risks. And so the whole issue with Latin America is if you can understand the risk and manage the risk, your transaction can be quite successful and your return on investment can be very interesting for your investors. I think the key is understanding the due diligence and understanding how you're gonna leverage your risk. Many times you have to do so between signing and closing with things such as currency fluctuations, and make sure that you understand what you're doing and understand the market or where it's coming. It's not about the government and betting on the government, because you'll always lose. I think it's about understanding where you're getting yourself into and the type of industry that you're trying to penetrate in a particular country. But all in all, we've seen an uptick in Latin America and work, both inbound and outbound. Happy to speak about more in the breakout session, and welcome.
Thank you very much, Carol. I'll save my presentation on Russia, China, and that whole dynamics for the breakout myself, given the time constraint that we have. But before we go, 20 seconds, starting from model, coming down, what keeps you up at night and what excites you about Latin America?
Well, I didn't have a chance to speak though. But I was gonna say some words more from a micro perspective. So what I wanted to tell you is that what keeps me up at night is the missed opportunities of Latin America over and over again, which have to do with the rule of law. Two quick examples here. The government privatized Eletrobras, and then the next government is now trying to renegotiate the political powers within the company. Also, lots of companies signed concession agreements for rail operators. They had to renegotiate the whole thing. I mean, this really is Latin America shooting itself on the foot. In terms of opportunities, we saw Axel mention here about some of the companies, and some companies listed in the United States. It actually is partly because of that problem of rule of law. You saw in the case of Petrobras, for example, the shareholders were able to settle here in the US for $3.5 billion after the losses due to corruption. In Brazil, the whole cases were just thrown away. So this is reducing the ability of the capital markets in Brazil to attract and protect investors. The gatekeepers in that market are not good enough, and this translates into missed opportunities. I think there is space for investors who have the time and the interest in thinking about the specifics of how these companies are run to make a difference and make a lot of money.
Thank you, Maro. That's a long 20 seconds there, but that's good. Very informative.
I didn't have my 5 minutes though.
Axel.
Okay, I'll try to keep it brief. keeps me up at night, I think I mentioned it, it's the local stuff. It's the lack of growth and insecurity in Latin America that keeps me up at night. The opportunity is to leverage on what Eduardo was mentioning, to surprise that we are important, then we can become very important. There's a 2014 movie called A Day Without a Mexican. Figure out the US without Mexicans, and you'll see that we do a lot of heavy lifting over here.
Yeah, that's true. Yeah. Thank you, Axel.
Very, very quickly, my gravest concern is, I would say, the intensity of electoral cycles in Latin America and the intensity of our electoral cycles. Latin America will have 4 elections: Honduras, Ecuador in 2 weeks, Bolivia in July, and Chile in November. The outcome there will largely determine the political direction of the region. And if it aligns with the vision that's coming from Washington, maybe there's a good chance that things will go better. But otherwise, the kinds of concerns that these electoral cycles bring out, for example, I'm not too sure that the right will win in Ecuador in 2 weeks. I'm not sure what the outcome will be. I mean, that's what elections are supposed to be about, right? We always say democracy is the institutionalization of uncertainty, right? But the trend is that we like to have clear-cut winners. Most are not clear-cut winners. And so the problem of governance, I know that you all don't like politicians, but unfortunately, they're the ones who make the decisions. So.
Thank you, Eduardo. Paul.
Say, just to clarify, I like politicians, I just don't want to be one. What keeps me up at night? Drug trafficking, and the fact that little by little, and you don't see this much in the press, but they're taking over very, very robust commercial businesses now. And I'm talking about agriculture. If you go to Mexico, where my wife is from, and where I go very frequently, they've expanded well out of drug trafficking, and they just continue to expand. And if you don't sell to them, let's say you have a nice avocado state or something, they'll kill you and your family. So yes, the rule of law obviously is important. That concerns me on the expansion. It's not just in Mexico, we're seeing it in Colombia and other areas as well. And those businesses operate outside of the rule of law, and they operate outside of the regular economy. So I just have a weary eye on that. In terms of what gets me excited, I guess probably just coffee, caffeine,
I'm with you.
Thank you, Paul.
I think the biggest threat is missing opportunities in Mexico. Mexico is developing very quickly, and it's right time to take part in this business. From one side, from our side, of course, the political instability coming from the north, from US, is threatening.
Thank you.
I think what keeps me up at night is also what excites me the most, which is change and uncertainty. Change can be good, it can be bad. And so it also excites me because it creates a massive amount of, generation of work for us. Uncertainty, just change and uncertainty usually drives investors and companies to lawyers and to make sure that they're protected. So change and uncertainty.
Thank you, Carol. And thank you, everyone, for participating in this
Thank you.
panel.
We're going to transition to an amazing panel. Not that this wasn't. By the way, you will have the largest breakout room. You'll have room number 5, LATAM. Stay tuned.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.